Welcome to the virtual roadshow series on Channelchek. Of the 6,000 small and microcap companies listed on Channelchek, today we're featuring Golden Predator Mining, OTC ticker symbol NTGSF, TSXV ticker symbol GPY. Research coverage of Golden Predator is provided by Noble Capital Markets. Noble is a FINRA licensed SEC registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Mark Reichman, Noble's senior analyst covering Golden Predator, will ask our presenters a selection of the questions received. The source of the questions will remain anonymous. And now, here is Janet Lee Sheriff, CEO, and William Sheriff, Executive Chairman of Golden Predator, to make the presentation. Janet and William, take it away.
Thank you very much, and thank you to Noble for this forum and everyone for joining us today. My name is Janet Lee Sheriff. I am the Chief Executive Officer of Golden Predator Mining Corp. Also on the presentation today with me is William Sheriff. He is the Executive Chairman of the company. And in full disclosure, we are married, and I do report independently to a compensation committee. We are also the largest independent shareholders, along with Eric Sprott. I will take you through our presentation today. Golden Predator is solely focused on restarting the Brewery Creek mine in Canada's Yukon. You see the picture of the mine when it was in operations in the past. I will do the first part of the presentation. We will come to a leapfrog map that shows an overview of the property. And during this time, Bill will take over the presentation and focus in on the technical part of the project. We welcome all comments at the end and look forward to receiving them. Our disclaimer, pretty standard. I will be making some forward-looking statements, and we do ask that you do your own due diligence. As mentioned, we are solely focused on advancing the Brewery Creek project back into production. And we believe that there's a number of advantages that we offer as a company. We are looking at restarting a brownfields project that was a past producer. It is licensed for a restart, and we have a track record of building ounces at the project since we acquired Brewery Creek in 2009. We are committed to high environmental, social, and governance principles. And in addition to the exploration upside that we see across the property and the licensed area, the proven past producer, we are working in Canada's Yukon, which is a safe jurisdiction. High level, Brewery Creek is over 1 million ounces of indicated and inferred, with a new resource estimate coming. And in a safe jurisdiction, a proven past producer with a socioeconomic accord with the First Nation, we see a really solid project that's worked to de-risk the opportunity for our shareholders and offer something very unique in the market with a low capex. Just backing up a little bit to give you an overview of the company. We're about a $67 million market cap Canadian, 168 million shares issued and outstanding, 182 fully diluted. As mentioned, Bill and I, along with Eric Sprott, are the largest independent shareholders. High net worth investors out of CIBC in Toronto hold about 20% of the stock individually. Pat DeCapo with Power One and Albert Friedberg with Friedberg Mercantile are also shareholders. Our treasury is healthy. We have about 8 million in cash and equivalents. We recently sold a project called Three Aces to Seabridge Gold, and we sold that for about 300,000 shares of Seabridge, which has increased significantly since the acquisition. And our investment committee has an option writing program on the Seabridge stock, which we do plan on holding. Bill will be joining us from the board of directors. Bill is a serial entrepreneur. It's one of the largest claim holders historically in the Southwest US. And he took energy metals from a $1 million market cap to sale of to Uranium One for 1.8 billion. A strong board with Stefan Spears from McEwen Mining and Tony Lesiak from Canaccord. Richard Goldfarb is a world-renowned geologist who ironically did a paper on Brewery Creek back in the 80s. And Bill Harris joins us with a strong financial background from his management experience on Fortune 500 companies. It's really important to talk about the management team. My background is in social licensing and economics. I run the company. My focus is to put the right team together that can advance Brewery Creek as fast as possible. So bringing people in with a strong working knowledge and corporate memory has been extremely important. And to that end, I feel we have a very strong team that's capable of putting this project into production with their past experience. I focus on social licensing. I've lived in the Yukon for 25 years. I don't live there now, but I've maintained a strong working relationship, negotiated our benefits agreements with the First Nation governments, and I've worked with all governments. I believe that we incorporate a strong good neighbor policy, and we're very proactive and innovative in our approach. Mike Myslowski is our Chief Operating Officer. Mike is a mine operator. He's operated for Coeur and Teck. And Mike's been instrumental in bringing in our increases in resources. When we picked up Brewery Creek in 2009, there was about 150,000 ounces left. And Mike, in his time with us before and now back, has seen an increase to over 1 million ounces. Jim Hesketh is helping us with our engineering. And Jim is not only a mine operator and starter, but Jim has restarted a heap leach operation, which Brewery Creek is. And his experience with Rothschilds, with Brewery Creek in the past on the financing end, makes his knowledge vast as a starting point. Ed Hubert and Joe Harrington join us on the environmental end. Ed was the previous Deputy Minister of Environment for the Yukon government and knowledgeable on reclamation activities, as is Joe, with his patents on reclamation. As mentioned, we're very committed to ESG. Our compensation packages and our policies in place on the governance end are sound and reasonable. Social, we are extremely committed to our strong social license and view it as important as our mining license and water license. And Brewery Creek is a great example of our commitment to environmental principles, a project that was reclaimed to high standards and developed to high standards. And we maintain that in all of our different ways in working with the community. A couple of things you see here, we've started the Yukon Mint. It is dedicated to involving the community through the inclusion of Aboriginal art on coins that we produce. And we've run some really innovative programs with elders in order to seek to engage the community. We operate on two paths, community engagement and consultation, very separate and very important. Another asset that we have that I'm going to mention briefly is Group 11. It's a company that's created between Golden Predator, Encore Energy, and EnviroLeach Technologies, and it's dedicated to advancing some disruptive technology in the sector with in-place mining. It is using the knowledge of Encore's experts on in-situ recovery, EnviroLeach's technology for an environmentally friendly solution that is an alternate to cyanide. And Golden Predator's in there because we actually did the first in the world on-site test of an alternate to cyanide. And we did this with a unit that we built at our plant in the Yukon. And we set that up as a separate company because we do want to focus solely on advancing Brewery Creek back to production. The photo that you see here is the Brewery Creek mine when it operated from 96 to 02. In the foreground, you see the ponds that are still there, not presently aligned, and the ADR plant as well as the heap. As I mentioned earlier, it's a licensed past producer. The project went into temporary closure in '02 due to low gold prices. Viceroy chased the gold prices down from 400 to 250 and closed and put it into temporary closure, maintaining the licenses for a timely restart when the market conditions returned. We picked up the project in '09. We've increased the resources to about 760,000 indicated and 440,000 inferred. We are presently doing a restart study and a bankable feasibility study, which will all be completed by the end of the year. And we have an updated mineral resource estimate underway, nearing completion. This will replace the resource that you currently see, which does not include our 2019 drill program of 137 holes that was focused on upgrading and expanding our resources between the pits. And it does not include resources left on the heap leach pad. The Brewery Creek mine is a heap leach operation. It is focused on oxide only. And the previous operator did not crush the material. They did what's called run of mine, and the material has gold remaining on the heap, which we see we can recover by starting with the process of reprocessing and crushing the heap, and then adding new material from the licensed areas. 100% owned by Golden Predator. It's located about 55 kilometers from Dawson City, which again puts it into a very unique spot. You're not dealing with an isolated camp. You're dealing with a camp that's very close to a community that has a lot of infrastructure in place, an airport 25 kilometers away, power lines 17 kilometers away. It's a large project, 180 square kilometers, and a portion of that is licensed for mining. We have a socioeconomic accord in place with the Toronto Gwich'en, and they've been extremely supportive of our plans to restart the mine under our existing licenses. Infrastructure left in place means a very manageable CapEx for a restart. There's the heaps, there's buildings, there's pads for buildings, there's ponds, and we have experienced operators in place that can get us there. This is the map of the Brewery Creek project outlined in red, and you see the road access and the proximity to the Dawson City Airport and Dawson City, which, if you're not familiar, is in addition to being the home of Toronto Gwich'en First Nation, it is known for its role in the Klondike Gold Rush, and there is a significant amount of placer mining in the area. Zooming in on the property, you see the outline of the licensed area and the pits in green, which are historically the pits that were mined. In blue is the heap leach pad. The road access is on the west, and this is called the reserve trend, where we're focusing all of our efforts right now. We do have resources that were identified outside of the licensed area, and Bill will speak to the exploration upside and the potential to continue to expand this over time, but we are focused in that area. I'm going to show you a map. It's an overview visual of the area that you see in beige, and while I'm doing this, Bill will take over and I will be available for questions.
What we're looking at here is the overview. Once again, the green resource, and this is based on the 2019 resource that was put out by Gustafson last year. Did not include 100 and some odd holes that were done in 2019. As you can see, there's a whole series of pits in green that are elongated along a major controlling structure. Our objective through our drill program last year was to connect some of these into fewer but larger connected pits, which would have a dramatic impact on the operating conditions of any mine. And we were very largely successful in that. We don't have the results from the study yet, but we're keen enough on it to where we've already commissioned a feasibility study that we'll be incorporating the initial mining of or the initial resumption of mining, if you will, in the green areas. And we have a great deal of confidence that we will have reduced the number of pits, maybe into one in the main area there, or certainly no more than 2. You can also see the heap leach pad there in blue. I would call your attention rather to the note that we're still making discoveries. You can see just on the north end of that blue, you'll see a tiny little orange hatched area called Camp. That was essentially a new discovery last year. We'd had a hole in it a few years back, but we were able to establish a consistent mineralization that held together. And of course, that's on that same structure you can see. And we look forward to expanding that one as well. Next. Here again, Janet had mentioned this is just a close-up of that northern end of the trend where we did the infill drilling between the green blebs. And I think I've already covered that adequately. This map here really is the crux of what we did last year and where we're going all in one. So I'll spend a bit of time on this. Here again, you call your attention to that central band that's now got some annotations on it. The area in the red corridor, this was where we drilled over 130 holes with the singular objective of connecting the pits. Higher gold price, you can use a lower cutoff, you can bring in some of the lower grade halo around the higher grade pods that were already established and put it into a far more economic, attractive package. At least that was the objective. And as I say, I think our studies will bear that out as we release them. If you continue, this also shows you where the next exploration will go, obviously. We've got 2 more resources to the west-southwest. You can see those in the sort of purple color. We've got a pretty good amount of confidence that we can tie those together and potentially even tie them into the area in the red corridor, which would give us one singular body about 7 kilometers long. Obviously, the size equipment is a significant factor. You can use bigger equipment on bigger pits, haul distances, transportation, diesel cost. It all goes into the fact that we want to get bigger pits. Smaller pits are good, bigger pits are better. So that's been the main objective, and I think you'll see the fruits of that borne out. And certainly additional exploration next year for that purple zone. Similarly, off to the northeast and a little eastern jog from the last green pit, which is Lucky, you'll see we've got about another 2-kilometer extension that we're highly confident in being able to tie those together. The structure continues, the surface mineralization and geochem is quite good. There's just a gap in the drilling, and that would be our very first target out of the bat, and that would give us in excess of right at 5 kilometers of strike length, right on one single pit with a bit more drilling. So that's pretty exciting news. There are, and I'll come back to this, without getting too detailed, there are 3 parallel structures. This entire corridor here is called the reserve trend. It was the focus of the initial mining and exploration, certainly the focus of the bulk of our exploration since 2012, as we've grown the resource some 8-fold since acquiring the property. There is a parallel structure down near the arrow that shows 6 kilometer strike length. To the right of that is a little oval that says Lead Dog. That's the initial discovery made back in 2012 with no follow-up since on the southerly structure. If you look to the north of the main corridor, you'll see several yellow blebs, a green hatched bleb, and another orange one. These are on the northern thrust. And all of these are parallel structures. They're all the same length, and they all dip southeasterly towards the big yellow or tan-colored, orange-colored bleb in the bottom, which is a very interesting deposit in itself. It's a separate type of mineralization. It's a younger mineralization. It's a bit lower grade than the thrust-hosted mineralization, but it is very consistent. That is, the drill holes don't vary much in their grade. We've had oxide down to the full extent of our drilling depth, which is 200 meters. And significantly, this is a porphyry style mineralization. This is in an intrusive rock. It is, as I say, younger, barely tested, as you can see by the extent of the drilling on this. We did a bit more surface sampling over in the vicinity of the river to the east, where you can see the shape intersects the river. Very steep cliffs going into the river. We actually repelled geologists over this past year. we're able to establish the continuity of grade over there and similar looking material. So this hosts the real long-term blue sky for the property. You know, it's way too early to put a size potential on it, but you know, I would compare it to and lead you to other porphyry style mineralization deposits in the area and also in British Columbia, and you get some sense of the possible magnitude on this. You know, you're looking at an intrusive of some 20-some square kilometers that's mineralized and altered everywhere we've encountered it so far. So quite an attractive bit of blue sky. As I say, the grade is a bit lower. It's about 0.7 to 0.8 grams, but very continuous. So we've got that in as our phase 4 and 5 future. This is a bit of a time schedule, just showing you. The first two are actually complete into one bar, or they should be. That'll be revised coming forward. The heap leach reprocessing was initially envisioned as a standalone way to bootstrap our way into production. That was $500 or $600 ago in the price of gold, and the financing for the markets were not nearly as competitive and robust as they are now. So we had to look at a very small scale startup. Some of the facts that came out of that heap leach restart are quite promising. I can reduce the amount of crushing that we thought we were requiring, so that will be helpful on the OPEX. It also indicated that we'll be way better off to combine the heap leach reprocessing, that is to integrate it or blend it with freshly mined material that was normally in phase 2. So that's all one operation now. When we restart, we'll be taking material from the heap leach pad, blending it, crushing it, blending it with crushed ore from the new mines in that green area where the pits are coalescing, and restacking. That phase is a little bit short here. It'll probably extend out to 2028, maybe 2029, with our initial production in 2022, assuming that the studies come in right, have good numbers, and everything goes according to plan. As you may have noticed, there were a lot, and I think I called your attention to the thrusts on the northern, or deposits on the northern structure, as well as the newly emerging south. Well, many of these are in the existing mine plan, and the expansion of that should carry it for an additional 5 years or so. So, you know, here again, everything's subject to the feasibility plan, but the concept here is that, you know, you're looking at, you know, 7 to 10 year mine life with things that have been identified so far. There'll be some fine tuning required, a bit of infill here and there, but that's a pretty healthy, robust start, and it does not include all the resources on the property. You can see phase 4 there will be the further oxide expansion, and of course there's numerous drill targets, and I'll take you over those momentarily. But this property is really, even though it's lined up ready to go into production, it's really in its infancy in terms of geologic potential. Recall, it's 180 square kilometer property, and we've explored roughly 10 to 12% of it. So yeah, this gives you an idea here again of where we'll start. You can see in the outline colored areas the unbuilt cells 8 through 10. These are fully permitted with a 6 million ton capacity. The loaded cells 1 through 7 have right at close to 10 million tons. Approximately half of that will be offloaded, half of it will be reprocessed as we're envisioning it now. Here again, in a not standalone operation, but in a blended approach with new ore coming out of the pits that you see there in the upper right, where it says operational pits along reserve trend. And this single pad itself should serve us well for 4 to 5 years before any additional pad increases are available. And we're also studying, one of the results of the current study was to go higher on the pad lifts, and we've done stability testing, permeability testing, and in fact, with the coarser crush, we will be able to go in and amend our permits. We have all the geotechnical data to support a much higher pad height, which here again will defer an expense for an additional leach pad a number of years. Go ahead. These are the initial result, these are the 2019 resource figures that are in that red corridor, if you will, referring back to the map that I first started on, where I indicated our additional drilling last year was intended to tie those deposits together. Here they were all listed separately, and you can see the cutoff grade was relatively high, much higher than most of those being used by folks in the industry, even as late as last year. But we've got right at 350,000 ounces in the indicated oxide, just in the bold print that being Lower Fosters, Upper Fosters, Golden, Kokanee, and Lucky. These are the pits we're attempting to put together into a large single starter pit for the resumption of mining. Here again, that information will be in the study that Gustafson's doing now. I think we'll be largely successful on that, if not completely so. And we'll wait and see what that has to say. But in any event, you can look forward to that. The inferred, obviously, you'll have to have a little bit of additional drilling to move up to indicated, but we've got right at 400,000 ounces in that area of what we've been calling the Big Five. Obviously, it'll coalesce into fewer units and more ounces as we move forward. Go ahead. I'd mentioned that there were additional resources not in the mine plan. Next, please. And they show up in our fuller PowerPoint that's on the web, but we've got an additional probably 7 or 8 resource areas that'll be being upgraded and brought into the mine plan as time goes on. First feasibility study is going to concentrate on that we have right at hand, though. This is, Janet had mentioned in her first discussions that we've been quite successful in exploration at Brewery Creek. And in fact, every drill program we've had there has hit in excess of 75% successful drill holes. And I think that you'll see that continue for the future, just based on the number of undrilled targets with very similar metrics that we've started on. But these are various resource estimates. You can see we started with 100 and some thousand ounces, and we went up to, if you could go back for just one moment. Yeah, you can see we went back up to 1.1 million, 1.2 million ounces. So very robust growth, lots of good targets left. So now if you go forward. This is just to explain in a very cartoonish way with that detail. Here you see the 3 main structures with 2 faults that offset that. Those 3 structures continue on either side of the cross-cutting faults. Very little exploration has been directed outbound of those. Very little exploration has been conducted on the southerly thrust. So we have a lot in front of us. And one of the reasons that we've been so very successful in our exploration efforts are the vast amount of information left for us by our predecessor, Viceroy. Recall when they were operating, they were fighting a declining gold price. And nonetheless, they had a geologic team that identified an awful lot of surface data to suggest targets worthy of drilling. They just didn't have the money to drill it. We've been working on those and of course developed additional targets of our own. But on the next slide, I think you'll be able to see how well the geochem covers and it fits those structures much like a glove. In the central area, you're missing a bit just due to erosion, but many of these geochem anomalies, especially the ones outside of that central corridor, have yet to be drilled. Some of the northerly extensions on the northern one haven't as well. So we've got a myriad of drill targets on the higher grade structures. We've got just beginning really drilling on the porphyry target in the south. So where the resource is going to go on this project, it's very difficult to put a number on it. Suffice it to say, in 3 or 4 full-time, very heavy exploration years, we've taken it from 100 and some thousand ounces to over 1 million. And I think you'll see that same sort of growth profile going forward once exploration resumes. Our main priority now, though, is to get this thing into production so that exploration comes out at cash flow versus off of shareholder dilution and shareholder equity. We've certainly got plenty to get started on it, and it'd be silly not to take advantage of these good gold prices. So that's the exploration plan going forward. Here you can see what we're planning on doing in the bulk of this year, completing our mineral resource estimate. We'll have a metallurgic and geotechnical drill program in September. Get the results of that back as quickly as possible, and looking to get a BFS out by the end of the year. And during the entire year, expansions of the mining permits have been underway, and that will be accelerating towards the end of the year going into next year. And of course, everything's all dependent upon that all-important feasibility study, but with the grades we have and the infrastructure that's already there, we're certainly optimistic that that will put us in a position to review that report and hopefully move towards a production decision and financing of the mine early next year. And this is a computer animation in Leapfrog. You can see the heap leach, the 75-person camp in green there. We're now looking up that central thrust corridor, and you can see the amount of work done on it. On the ridge line to your left, you can see the northerly thrust with a bit of work done on it. And then the ridge on the south is the southerly thrust. The pits in green are the former producers. You can see the names populating there as we go forward. The yellow, red, and orange colors underneath those pits along that distance of 8 kilometers represent the 2019 resource estimate. And as we come around, spin around in 3D, you can see some of our new drilling last year as we, here again, focused our efforts with the exception of the 7 or 8 holes you see right in your central screen, 2019 camp zone. Here again, those were very successful and are still open to expansion. It'll be a new small resource area, we hope. But you'll be able to see additional drill holes up here in the northern main area of the Foster's Golden, Canadian, Kokanee, Lucky area. And here again, these were all drilled with the intent of coalescing or combining these existing resource areas simply for operational benefit to get a bigger single body, bigger single pits. So, and you can see that that drilling was quite successful. Not every hole hit, it never does, but very, very successful. And it really, what it does is it demonstrates this lower grade cloud of mineralization that's pervasive and extends along the entire structure that links these higher grade pods that were originally historically mined. Of course, there's a lot of mineralization left in those, so we will be mining those as well, but also through the fewer larger pits, we'll be taking the lower grade mineralization as well, which is quite attractive at current prices. One benefit of doing this larger pit is it also, while your grade drops a little bit, will still be in the 1 gram per ton neighborhood, which is quite good for open pit heap leach in a first world country. But it does reduce your stripping ratio, and you end up with wider, shallower pits that don't get so far down into the sulfide. Of course, sulfide's not leachable. So lots to look forward to, and hopefully this video kind of ties together some of those ideas that I'd expressed on the 2-dimensional maps.
Thanks, Bill. I'm going to pass it back to Noble to field some questions. Just wanted to summarize by saying I think that the Golden Predator offers a really unique opportunity in a very safe jurisdiction with a team that has a track record of putting mines into production and operating them. A growing resource over 1 million ounces, over 1 gram per ton, and a licensed property. I think that combined with the exploration upside and really an invested and innovative management team to be considered a project going forward. With that, I'm going to pass it back to Noble, and we'll field any questions that people may have today. We'll also provide info@goldenpredator.com as the contact information should we not be able to get to all questions today.
Thank you, Janet. I'm Mark Reichman, the Noble Senior Analyst who covers Golden Predator mining. I will be reading the questions, which we have quite a few, submitted for Janet and Bill's response. So the first question is, does the company retain any economic benefit from the success of the company's previously owned lead project?
Bill, do you want to take that one?
Yeah, I'll take that one. By the previously owned lead project, I'm assuming that they're speaking of the Marg deposit, which is a polymetallic deposit located about 40 miles east, or 40 kilometers rather, east of Alexco's operation in the Yukon. That deposit is still held in inventory. It's a non-core asset, but it does have a rather nice, substantial 43101 resource on it that's quite comparable to the Minto mine that's in production currently in the Yukon. It's not road accessible other than by a 40-kilometer winter road, so certainly infrastructure work will be key on that one. And as a polymetallic massive sulfide, we've chosen to not spend money on exploration and infrastructure on it. It's clearly not as close to production as Brewery Creek, nor does it have the ultimate potential. It's a nice sized deposit. As I say, I think you can compare it quite favorably to Minto, but it's certainly not going to be a multi-million ounce gold deposit. So we've chosen, with limited resources, no matter how robust the markets are, there are always limited resources in this business. We've chosen to pursue our best asset and push it into cash flow as quickly as possible.
The second question,
we'll be looking to do a deal on it where we would retain obviously we get some consideration for the property. significant compensation, I believe, and also retain a royalty. We'll retain a royalty on any project that we get rid of.
The second question is, assuming the company generates significant earnings and cash flow once production commences in 2022, would management contemplate repurchasing company shares if they believe the share price does not reflect reasonable market value, and/or does management see paying dividends in cash or gold using the Yukon Mint?
Bill's the chair of the board, so I think it's appropriate that he answers those questions.
Yeah, I mean, we've talked about this a lot, and obviously, as some of the biggest shareholders, along with Eric Sprott, it's would be key on our. I would very much approve of the approach Rob McEwen's taken in the past, where he dividends out small amounts on his holdings, and he enjoys that as well as his other shareholders. Obviously, we would do so as well. There'd be a number of considerations as to timing of that, and I think principally about that is obviously we'd have to repay any loans that were out to get us into production. So I would not look for any sort of significant stock buyback or a dividend the first year of production. But once production solidly established, profit margins are acceptable, then I think a keen effort to along both lines, both in terms of a dividend. There are very few gold stocks that pay dividends, and the ones that are out there, we're keenly aware of the market benefits that they enjoy by virtue of that. Certainly puts them in an elite crowd in terms of the investors world. So we would look to establish that as soon as it was prudently possible, and the board supported it. And similarly with the stock buyback, we have had stock buybacks in the past, but obviously they've been quite limited because we haven't had a revenue source such as a producing mine. So yes, on both accounts, dependent upon the health and the timing of the company's cash flow.
Can Golden Predator post Dr. Goldfarb's paper on Brewery Creek on its website or Facebook page?
Good idea.
Yeah, that's a really good idea. I will look it up and seek his permission, and we could always put it on both. Good idea.
The next question is, has the camp started up again since the outbreak of COVID-19?
I'll take that question on operations. In 2019, we moved a 49-person ATCO camp onto site. We already had a 25-person camp there, giving us the capacity you see now. We made a decision in conjunction with the community of Dawson and the Toronto Gwich'in that the camp, because of its proximity to Dawson City, would be used as an emergency backup in case they needed more healthcare space, because it's clean and operational but not used. To everyone's enjoyment, the camp has not been needed. We will not be using the 49-person camp today this year, but we will be using the smaller camp when we do a drill program. And we hope that the community continues to enjoy the benefit of not needing the camp that is available.
Do you have a rough idea on the CapEx of a restart?
Yeah, let me handle that. We've got obviously some ideas that it'll change somewhat in the feasibility study. Part of the original study by Kappas was to source the equipment and all that. We'd originally projected numbers in the 35 to 40 million US on equipment. We don't have their final report yet, but I think we'll be in that neighborhood. There's a number of other issues. Once we expand into the hard rock mining, that will change that. While it's not a current document, I'd refer to the 2014 PEA, which is not, it's a very good guideline. It's not a fixed number. We'll have to wait till the end of the year to get the fixed number on it. But I think it's fair to say it'll be under 100 million all in. And that's with your contingencies and everything else. And that certainly is quite competitive in this market for the enlarged program of not only reprocessing, but also mining the additional hard rock resources.
Next
so
question
here again, it's just a rough guideline. You'll have to see the feasibility study when it comes in. I mean, that's the reason we're doing it, is to get the hard numbers on these things.
What is the exploration budget during the next 12 months?
It's a good question. We're quite frankly, right now, the next 12 months are going to be dedicated to getting what we've got going. And as such, the exploration budget's quite minimal. We do have exploration programs lined up in phases on different targets. Obviously, most of them correspond to that drawing I showed with the red corridor. The initial, probably slightly under or right at $1 million budget would be to extend that red corridor to the east. Some of this is with a caveat. We need to see what our current studies come out recommending in terms of additional action. Some of that exploration money may actually be redirected towards infill upgrade drilling, taking some of that inferred resource and moving it up into the indicated category. We'll just have to wait and see what the studies say. But we're a bit fluid on that. We don't know how long the COVID situation is going to last. Obviously, it's already lasted a bit too long. We all have our own ideas about that, but we're certainly adhering to best practices on that. And right now, getting these studies out is the priority. We have, as much as a $10 million program in mind if things go very, very well, if COVID gets under control, if the study comes out recommending no further work in the resource area. There are a lot of ifs. So here again, I'm going to give you a range. We've got a myriad of studies coming out. We've got already ready to go and on a moment's notice basically can mobilize for drill programs to both extend the thrust mineralization as well as we obviously would love to get the exploration really get revved up on those porphyries down to the south. That could be really huge potential. And as a geologist, you just can't wait to sink your teeth or the drill rig actually into that. We've got a 20-some square kilometer target, and we've got a little bit of drilling around the fringe and some samples on the east side. And geophysics are quite good on it. So, I would love to go out and just spend the whole year drilling that. I think we'd have some phenomenal results. But, we're trying to take this step by step methodically and not so much as a geologic project, but as a economic project where we're coalescing, operational skills from the engineering side, the dreaming of the geologist and creativity of them, and the practicality of operating a profitable business. So, hopefully that answered your question.
What cutoff grade and gold price is being used in the feasibility study now underway?
We don't know that yet. The only one we know for sure is the cutoff, because the cutoff's determined not by an arbitrary number, but it's cut off by economic justification and statistical analysis of your data and your operating cost estimates, a number of factors. And I'm not an expert on that, so I may be leaving some of them out. In fact, I'm certain I am. But the cutoff is not an arbitrary grade that we assign to the modeler or to the feasibility study author saying, run this at 0.4 grams, run this at 0.5 grams. The only thing I can tell you is what they've been run at in the past, and that information we've already come around. The last one that was done in 2019 on the mineral resource was at 0.5 gram. One thing we have asked is that we get a sensitivity analysis in our resource estimate so that we show different scenarios at different cutoff grades. And then, of course, once that's done, which will be here very shortly, then that goes on to the authors of the feasibility study, and they will, in fact, generate their own cutoff grades based on a mining schedule, which is not part of the mineral resource, an actual in-depth, the aspects of an operational plan for the feasibility study. So they're variable. I can tell you in general ranges, they won't go as low as 1/4 gram. It's too low for us, I believe. And certainly it'll be, no more than 0.5 gram on the upside.
As you write covered calls in your option writing program, how far out are you going to write these calls?
Well, we use a mixed strategy. In full disclosure, I was a registered options principal in another lifetime, so made most of my living at that time in the options business and trading options. And Tony Lesiak has got quite a bit of experience in this as well. He's on our investment committee. It's run by a committee of 3, including our CFO. And we have elected in this current environment to have a 3-phase approach. That is a mixture of short-term and medium-term explorations. No long-term. I believe right now our furthest out is probably November, although we're starting to look at January's. And we've also been the 3-phase strategy is we've elected to look at roughly a third conservative, that is nearer to the money or sometimes in the money calls where there exists a significant premium, and with a third slightly above the market, and then a third that are very optimistically priced, shall we say. But the whole intent is to retain the position and yet generate income, ideally sufficiently for our G&A. I don't know that we'll achieve that, but that's the objective. And so far so good. We're doing okay on the program. And of course, those results I'm sure will be reported somehow in the financial statements.
I think the last question will be, other companies tell us permitting has become more difficult in the Yukon. Can you comment?
I'll take this one. I think the Yukon is a jurisdiction that's maturing. They've gone through a number of changes in the past 20 years. And I think it's important that you are knowledgeable on the Yukon and permitting systems in order to achieve success. I also think it's extremely important to establish your social license in advance and to work extremely closely with the First Nation and the community that's affected. As an aside, the Brewery Creek quartz mining license was the first quartz mining license ever issued by the Yukon government. And the Brewery Creek mine was the first mine that ever had a socioeconomic accord with the First Nation. So if that gives you some idea on how things have evolved, it's very important to work and understand the environment you're working in. But there are permitted mines. Minto is operating, Victoria Gold is operating and went through the process, and Alexco Resources has been operating in Keno and just received their water license. I believe the Yukon is well intentioned. They are learning the process, and I work extremely closely, as mentioned again, with the First Nation. I believe they are our partners going forward, small p, and important in the process.
Well, that is all the time we have today. Thank you for helping us to get a better understanding of the company's story. If you would like to access our independent research on golden predator mining, please go to channelchek.com and type the company name or the ticker NTGSF in the search box located in the top left company data section of the site. A recording of today's virtual roadshow will also be available on Channelchek. Again, thank you to our guests, Bill and Janet Lee Sheriff from Golden Predator Mining.
Thank you.
Mark, have a great day.
I would also like to thank all of you from the investment community who have watched today. Log in for more virtual roadshows on Channelchek, brought to you by Noble Capital Markets.